Well, good evening, everyone. It is Shooter. It is October 27th. I think it's just before 8 p.m. Of course, at the end of our presentation, please do review our disclosure. Okay, let's jump right into this. We are going to cover swing trade notes. And, today, my thought is, at least the way the futures have opened today, which is sort of why I waited to do the video until later. We had a little push lower and then we have a little bit of a pop like we normally do. However, a lot of the indicators are implying that we're not done with the pullback that we had a couple of days back. So, I think Tesla saved us as far as earnings. So I think Monday and Tuesday are going to be important. I'm looking at not necessarily like we see a turnaround Tuesday. I'm thinking we could see some red the first part of the week. And then midweek, as the bigger players and earnings come into play, the 29th and the 30th, as well as the 31st, then I think we will probably turn a little more bullish again. But so let's just last week's performance, we hit a little over $3 contract. Really tried to stay light just because I didn't like couple things, actually trimmed and got rid of a couple of positions there midstream just because I didn't like the flow. I was thinking we were going to turn down. Now looking at the bulk this week, there's a lot I like in earnings. I like AMD, but I didn't like the count because I had an ABC a little bit lower than what was there. I like Chipotle. I like McDonald's. Now, McDonald's, just a little tip here. I posted this in chat, but historically, if you buy McDonald's Tuesday, the day of earnings. Typically, 87% of the history going back from the beginning of earnings in McDonald's, it's been bullish with the average gain of about 4% over the next couple of weeks. And quite often it happens the first day, just as a tidbit. I hope Pfizer turns around. I actually like Waste Management, but we really don't have time to put a position on there. I think Uber is a big factor. Thursday, obviously we're all going to be watching Microsoft, Meta. Now, Coinbase caught my attention as well as Hood. Both of them had decent setup. But ultimately, I decided to go with some of the bread and butter. I decided to go with Google and Meta. And the reason being is the charts and the history of the upside. Also, the fact there's a rumor going around that Google is going to have some new AI. So looking at Google, the way I see this, I think the safe bet here is I think this is a safer play than really any of the three trades that I have up. I think the December 165 cash secured puts make the most sense. That is a conservative investor. Really our stop is a close below 162.77. Now, just keep in mind, if they miss, we're going to take out about 50% of this push between our cycle wave 2 and our primary wave. So that'll put us down to about 155, 156. So you will get hit on those, and you would probably take about a $7 or $8 loss because of the price, even with the price of the premium. However, I also like the November 1st 175 calls. And again, the earnings is the 29th before the close. So technically tomorrow we open the 28th, before the open. So we have earnings Tuesday. So that's just my thought pattern. I like, out of all the stuff I looked at, I was trying to stay very conservative. Looking at Meta, I like the pullback. I like the gap up on the push on our recovery. Only thing I don't like is the fact we closed on the low side of that candle. However, structurally, everything looked really pretty good. If you draw a trend line here, we pretty much hit the trend line on RSI as far as trend support, which implies that we're really in this up leg. And one thing that really caught my attention here is the measured move from this flag puts us up at 713. Now, I don't think that's going to happen today, being very candid. It could take us the next year for that to play out. But the reality is I like the flag. I liked the way the structure of it looked. I liked the numbers in the measured move. I liked where support went right to where the breakout was, where we back tested the breakout. And then we had this gap up. I just liked that look. So I like the idea of selling December 565 cash secured puts a little bit lower because it has a different risk because of that gap for me. Not quite as tight as Google. If Google does anything, it goes nowhere, is my thinking, because I can't really see anything hitting Google. And the fact that they have some kind of AI item coming out that can help you control your computer is the rumor. If that news comes out here on this, I think we pop on that, and I think we could take out this high really quick. So our intermediate wave 3 is about 603. So the challenging part is 50% back of this leg is 582.20. Ultimately, that's my game plan. So I also like the November 585 calls because it's the closest thing to there. Plus, it gets you that further out. Now it's after the close on the 30th. Excuse me, I got the wrong date on there, but just bringing you up to speed there. Now, the VIX. I wanted to put 55s back on Friday and I hesitated and I regretted it as soon as I started looking at my charts this weekend because it came right. I mean, we're at 55. I think we break out here, taking our Fibonacci extensions from this last push. Our intermediate wave one comes in around 79. So we are going to have a sell. This is going to pop 50% back on that measurement, brings us to about 69 bucks. However, I am just targeting the breakout line because I'm looking at this as sort of insurance for Google and Meta. So I'm going to take a equal position size in the VIX comparable to what I have in Meta and in Google. And then, that the idea there is it closes below this 52.72. We have a total rally and all of these bearish looking charts just disappear. Obviously, I'm going to take it off. I'm going to take a little bit of a hit on that. But at the same time, I want to be on the upside of Google and Meta here just because I like where the charts are. And I also really like the FOMO that we saw with Tesla. Now that's, a kindling spirit in my view that tells us that there's a lot of money on the sideline wanting to chase something. They're looking for something to chase. And I spent hours this weekend going over charts. And bottom line, I liked Google and Meta the most because back to the same thesis that we've had during this entire bull market is that the Mag 7 led and they've been lagging. And what did both Google and Meta do? And I think the VIX is my way of sort of putting some insurance on and getting a little more comfortable with taking such a large position size both in Google and Meta going into this week. So that's what I have for this week, folks. Great trading. Until next time.